In essence, if we want to direct our lives, we must take control of our consistent actions. It's not what we do once in a while that shapes our lives, but what we do consistently. Tony Robbins. Well, friends, every day, 10 to 15 minutes, that is all we ask. If you will spend that time with us, devoting yourself to understanding how these waves of price movement react, being able to consistently follow trends. And again, that's what this is all about. Everything about technical analysis or charting is literally about recognizing waves, peaks and troughs, being able to get into those movements. I am all for value investing. I'm all for any kind of fundamental analysis you want to do. But like with anything, you don't want to pay more than you have to. You don't want to buy at the wrong time. You don't want to sell at the wrong time. You want to make the right decision. So technical analysis along with fundamental analysis is the best way to go. And for those of you just interested in trading, absolutely what we do works. Now, we are in an absolutely crazy time in the market. What is that shown by? Look at what the S&P has done over the last month running up to the election. Total insanity. It dropped. We had a weekly vertical crossover going down. Of course, the market then immediately turned around, crossed back over going up just 2 weeks later, and then, of course, crossed over going down soon after that, and then crossed back over going up. As we told you yesterday to be on the lookout for that, we had a weekly vertical crossover at the end of the day this Friday. Yes, another one. And look at the large green up candle that we have. It is massive. Of course, you can see that the wick itself pushed through, as did the candle just a little bit. The Bollinger Bands, those are the volatility bands. So again, craziness. The price percent oscillator has crossed over. We've already moved. You can barely see it. It's there right next to the blue trend line. I'm sorry, not blue trend line, blue vertical crossover. When the weekly occurs, that is our biggest signal for a change in trend. A lot of people simplify it and say between fear and greed. We now see the market trending up, confirmed with a weekly vertical crossover. Derivative oscillator still a bit negative. Let's dive a little deeper. Look at the 2-day chart. You can see that we now have 8 candles moving up, up, up. We move that crossover, that 2-day crossover out of the way, and you can see, though, that we've not reached a higher high since that 2-day high we had back on the Friday-Monday 2-day candle. But we do see the candlesticks themselves trying to move higher. We see the price percent oscillator still going up, derivative oscillator gaining upward momentum. Go to the half-day chart. What do we see there? Looked like it was going to cross over going down, but then just managed to run parallel to it on the half-day chart. Up in the morning, further up in the afternoon, like we said. For the day on Friday, up 1.38%. Derivative oscillator still negative. So that comes from that day of strong down movement on the 12th. So we'll watch, see how things go. Again, hope that you jumped into this practice trade. Hope that you are doing all the practice trades you can do. Again, you can do the same analysis we do on your favorite ETFs and your favorite stocks. Remember, you've got to have recognizable, consistent weekly vertical crossovers and, of course, 2-day recrosses where the 2-day crosses back in the direction of the weekly. How do you determine whether they're consistent and reliable? Well, you go back in time and you test them. Please read the book. We've got a great book. Want you to have it. You'll see a link in your show notes to purchase it. Also, let me ask you for a favor. We have tons of recording, tons of teachings. We put them out every day. I really want to know if you'll put it in the show notes or email us cw@chartingwealth.com. Let us know what other trainings we can do for you. We have them virtually on everything from the price percent oscillator, derivative oscillator, the weekly vertical crossovers, 2-day recrosses, backtracking, trend lines, Bollinger Bands, you name it. It's all covered in the book, and we have tons of training on all these things. But I'd like to know what additional trainings you need, what we could help you with. So be sure to let us know what's going on there. Now, we're going to leave the S&P 500, go to the Nasdaq 100. Look at it, still negative, going just flat. The derivative oscillator still negative, price percent oscillator pretty much flat. We did have a green up week. We had a green up candle for the weekend. Of course, we go to the 2-day chart. We had that 2-day crossover going up. I'll move the crossover out of the way, but you can see haven't reached anywhere near that high. That 2-day crossover on Monday, same time we saw the 2-day crossover on the S&P. And then look at the Qs though. It just sort of died the next 2-day candle, popped up on this one, but still nowhere near the high that we saw before. Price percent oscillator slowly pulling away from the red signal line, derivative oscillator green, and going up. Look at what has happened on the half-day chart. Again, dropped for a day and a half back from the time it peaked on Monday. Then that was Monday afternoon. We started seeing it move down, Tuesday down, and then tried to recover a little bit on Wednesday, then dropped off. Wednesday and Thursday in the morning, dropped off Thursday afternoon, then up a little bit on Friday, but not reaching the high that it reached back on Thursday morning. So again, consequently has not crossed over going up. So again, Nasdaq 100 not moving in the same direction as the S&P. We'll see how that continues to track and just what happens. One of two things will occur. Either the 2-day is going to lose its energy and cross back over going down. That'll be a 2-day recross, or the weekly is going to get enough energy as we go through the next week or two and cross over going up. We'll just wait and see how that happens. Remember, first rule in trading, don't lose money. Second rule in trading, make money. My friends, never get pressed into making a trade. Things are screwy now. We all recognize that. So guess what? When things are screwy and it's difficult to find good trades, when you get at some point way down the road, when you get to real money trading, what you've got to learn is you sit on your cash until you have clear, discernible trends on ETFs and stocks that you have practice traded in the past that you feel comfortable with. But don't ever think about risking any of your money on a lark. That's called gambling, and I recommend you go to Las Vegas. Now, let's look at TLT, 20-year bonds, down for the day 0.13%. We have a red down week, price percent oscillator negative, moving down, not super strong, but moving down. Derivative oscillator losing a little bit of downward energy, but again, a red down candle. We go to the half-day chart. What do we see there? I'm sorry, not half-day, 2-day. We'll get to the half-day in just a minute. We see the latest one is a green spinning top, an open box green spinning top. That is up movement. Consequently, we see the price percent oscillator heading up. Derivative oscillator has been positive now that's 4 2-day candles. That's 8 days, actually gaining energy on the last one. So again, when we look at the 2-day trend line, we can see it's sitting right there on it. So again, we'll continue to watch, see what there is to see there. But the 2-day and the weekly are, of course, in confirmed down moves. Look at what's happened with the half-day crossed over going up, actually crossing over at the end of the day on Thursday, in effect on Friday morning and afternoon, but sitting right there on the weekly trend line. So we'll continue to watch, see how bonds sort themselves out, and just what's going to occur as we move forward. What would we expect? If the stock market's going to take off, we would expect bonds to crash and move down. They are slowly trending down, which again typically means what? When the stock market's doing poorly, money goes into bonds. When the stock market's doing well, money tends to flow out of bonds. Well, the overall mood is we can see down. So we'll continue to keep our powder dry, watch how these things sort their way out. Now we go to gold. Look at gold, ended the week, red down candle. It was up for the day, 0.68%, up a little bit. But look at that price percent oscillator clicking over, going down. Derivative oscillator losing some downward momentum, but a red down week nonetheless. Look at the 2-day chart. The price percent oscillator is about flat. Derivative oscillators negative. We ended the latest 2-day candle with a solid green spinning top. Means a slowdown in the down movement with indecision below the weekly trend line, sitting just below it. But again, we see that the price percent oscillator on the 2-day chart is still negative. We look at the half-day chart. What do we see there? Well, we see that we've had about 2.5 days of up movement, booming up in the morning and then slowing down in the afternoon on Friday. Hasn't crossed over going up yet. So again, gold is still trying to sort its way out, still in a confirmed down move. And again, gold is another potential safe haven if the market is not doing well. But if the market's doing well, gold tends to move down. Not always as much as bonds. Gold is an interesting entity. We keep hearing everyone say, of course, after it peaked back in, that was actually early August. Since then, it's trended down. So again, about the time you hear all the ads on TV to buy gold, that's usually about the time it peaks. So we'll continue to watch. I can't wait for gold to cross back over going up. When it does, we'll be here with you to tell you, to help ride it up together in our practice trades. Thanks again, my friends. Love to hear from you. Let me know what extra trainings you'd like us to put together for you. We do have a great training in today's notes. It is about the importance of liquidity. Liquidity, a secret to your success. That is in the show notes. That's available for all of our subscribers. You subscribe for free at chartingwealth.com. You'll also see links in the notes to everything, whether you're listening on YouTube, the podcast, you're a subscriber. You'll see links to the trade worksheet, daily market worksheet, weekly market worksheet. I'm going to put all three of those trainings on how to use those worksheets at the end of today's video. And of course, in your show notes, you'll see that special training on liquidity. And also don't hesitate to email us or put in the show notes, that is your comments. Let us know what extra trainings you would like for us to do for you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.